Hello traders and welcome to another video review. Today is Wednesday, August 6th, 2024. Let's find out what's going on daily time frame chart of Ether. As you can see, I'm using the chart of the Ether to Tether at Zondacrypto, and this situation here needs some sort of the analysis. So we got this big waterfall like formation here that made a new low at the level of 2166. Eventually, when this market is so emotional, it's kind of useless to apply the technical analysis immediately, because all of these levels that we put on the chart will likely be invalidated, or market will not respect them. Nevertheless, 2-3 days after this very big movements, up and down, emotional movements, clearly emotional movements, it is worth to take a look what is going on the chart. So let me just mark some few levels. First off is this low here, which is almost in line with the previous very important swing low, located at 2177. There is another level which is a little bit lower, 2103. Hold on. Okay, there you go. Let me just zoom out, and while we are looking at this, I just want to show you, there you go, I just want to show you this area here, that high and that high. This high is from 2023. This is the 8th of the April 2023. This is the 15th of the July 2023. That's the end of the year. That's the November-December period 2023. That's the beginning of 2024. Up we go, test to the moon. Yeah, 4084 is the high. Now we tested this level now. Okay, and if we look at these levels here, we might want to mark them as a zone, because it is a very important zone. Of course, we are talking about the supply zone. Let me just mark it for you guys, so you know what is going on here. So we mean very large, very big and substantially old, at least yearly, demand zone that is now being tested. Now it's being tested by the market participants. So if you still don't know what's going on, let me just mark it down for you with this arrows. That's the first test, that's the second test of this zone, and then you got the breakout to the upside. So you got the breakout, and then that's the third one apparently, but you get the point, right? There's a change of the resistance to the support, and these days even the last swing low didn't make it below the zone. So only the most important zones and levels could withstand this kind of a waterfall formation, right? So we know that already. So as you can see, now we have a defined range of the market and defined technical support. At least the technical support is defined. The ranges, of course, to the upside, but quite closely there's another level here. It's not that important, so let me just mark it like that. And it's red, so it's a technical resistance, and this technical resistance has been tested plenty of times, but it's very rarely for the market to just use a one level. Most likely it's a kind of a zone, especially if the market is not that liquid at all. So we got this situation here with the technical resistance 2852, 2879, and as long as we trade below this zone, the outlook remains bearish. Moreover, if you add moving average cross, you can clearly see that when you change the moving average to 100 and 200, you can see that the market is way below these two moving averages, which means eventually we've made it to the downside. One more and last thing for all of the Fibonacci lovers, what is going on here? If we take a look at this A, B, and C movement to the downside. Let's see if there are any relationships between those waves here. So from the extreme top of the wave A to the extreme bottom of the wave A, right? So that's the wave A. We go up to the wave B extreme high, and as you can see, there is nothing here. There's almost nothing here. Let me just find out if there's 1.27 somewhere there. There you go. There's 1.27. So eventually this Fibonacci projection is showing us that the 127% Fibonacci, let me take it to the downside. There you go. Level is 2066. So virtually 161 has not been hit because it's on the 1667, and 100%, which was at the level of 2380, was violated as well. So you can see that the Fibonacci relationship doesn't actually work very well this time. For example, if we take into the account the whole movement here, of course we can do it, but in that situation we would have to put this level here, this extreme low here, sorry, 1 second, this extreme low here, and let's say this measurement roughly around here. Okay, and now we got 100% violated without any problems, 127 violated without any problems, and 1942, 61% didn't even make it. So actually Fibonacci wasn't very helpful this time, and that's because, as I said, during the very emotional times on the market, we cannot actually rely on this kind of indicators, and the Fibonacci indicator is one of the most common used indicators for someone who is a technical analysis enthusiast. However, when the dust settles, when the market become more rational, not emotional, we can easily take a look at these levels back on again and see what is going on the markets. Right now, very big spread, very big levels here. Volatility is very, very limited these days, so we need to wait and see what the market can do in the nearest future. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.